A CD or a certificate of deposit is a safe way of investing and growing your money with predictable earnings. It's a saving vehicle offered by banks and credit unions that holds a fixed amount of money for a fixed period of time, and in exchange, the issuer pays you interest.
You deposit an amount called principal into the CD for a fixed duration, known as the term, and leave it there untouched for that duration. You are offered a fixed interest rate for the length of your term. CD terms typically range from 3 months to 5 years. The CD matures when the term is reached, at which you receive the principal plus the interest. However, you'll incur a penalty if you withdraw your funds before the term is completed.
CDs are considered to be one of the safest savings options. A CD bought through a federally insured bank is insured up to $250,000. Note that this insurance coverage is for all accounts in your name combined together at the same bank, but not for each CD or account you have at the bank.
Following are the things to consider when opening a CD. Pay attention to the Fed's rate change movements and plans, as that directly impact the CD rates. You don't want to lock in a mediocre rate for a long time when Fed has plans to raise interest rates in the immediate future. Conversely, it's better to lock in a longer-term CD when there's an expectation that Fed will decrease rates in the near term.
Make sure that the money that you put in a CD is not needed until the maturity date so as to avoid early withdrawal penalties or lost interest.
Make sure to shop around for CDs, as different banks offer different rates, terms, and initial amounts. Some of the online banks provide better interest rates than traditional brick-and-mortar banks. It would be a mistake to consider only the institution that you currently bank with, without exploring outside options. Monitor and leverage the promotional CD offers that financial institutions roll out time to time to attract new customers.
Choose an institution for your CDs that carries FDIC or NCUA insurance. Note that those federal insurance protections of $250,000 is per person for each financial institution you have set up CDs with. Therefore, do not deposit more than that amount at a time in the same bank or credit union.
Consider doing CD laddering. This is a strategy where you invest in several certificates of deposit with staggered maturities to take advantage of higher rates on longer-term CDs, while still keeping some of your funds accessible in the near term. The annual percentage yield, APY, gives you the real rate of return earned on a CD, taking into account the effect of compound growth. Therefore, do not just look at the interest rate alone, but ensure that you are getting a good APY as well.
Don't let your CDs to simply roll over on maturity, which can potentially result in a renewal with a mediocre rate, totally different from what you currently get. At the same time, don't leave your matured funds uninvested at the end of the CD term as well.
Read the fine print of your deposit agreement carefully, as that would have all the terms and conditions related to minimum balance, term, interest rate, APR, fixed versus variable rates, early withdrawal penalty or EWP, action at maturity, federal insurance support, etc. Always check the bank's EWP policy before committing to a CD.
Although CDs are safe and give you guaranteed, predictable, non-volatile earnings, do not put all your investable money into CDs, as they usually do not earn you as much returns as other investment vehicles such as stocks and bonds. Spread your funds across multiple investment baskets. It's a good idea to put a portion of your rainy day emergency fund into one or more CDs. They give you better interest rates than savings or money market accounts. The interest paid out to you monthly or quarterly are taxable at the end of the tax year, even if you are not able to withdraw and use those interest earnings. Make sure that you plan for this while filing your taxes. And that's all for today. Thanks for watching. Please like, share, and subscribe if you found this channel useful.